has just cut rates.
Yes, I've already predicted that.
But how does that affect us here in Singapore? In this special episode of PYTCH, we spoke to everyday investors and experts from housing dreams to stock market moves and even
Pokemon cards.
Let us find out what a rate cut really means for us. Struggling to keep up? Welcome to the PYTCH.
Decided to lower our policy interest rate by a 1/4 percentage point.
The Fed has cut rates. How do you feel?
Oh, is it? Really?
I have waiting for this for a very long time already. And every time he just say like, want to fight inflation.
It was supposed to be June, then July, then September.
My reaction is just very simple. Wow, John Powell finally want to cut rate.
I think for me, it's a mixed emotions, but generally I'm leaning towards a positive one.
I'm very excited, and I think the entire market is looking forward to it.
On a scale of 1 to 10, how much do you actually care about the Fed's move?
I think for me it's about 5/10. Yeah.
I would say probably about a 7.
Probably a 3.
Maybe 5 or 6.
I think for me, I would rate it as a 7.
I also around 7 because before Fed cutting this rate, right, I already predicted and planned my portfolio ahead.
Sometimes, the market can do what it wants to do, right? So it doesn't always move in the way that we want to.
Finance stocks, REITs, and also home builder stocks. So this category of stock the price will go higher when the interest rate is lower.
So even though I think it's an important event, I wouldn't place too much emphasis on it.
It has direct effect, but then in the long term, it can also be a signal to whether or not it will lead to recession or the market, how is it heading towards. But then for me personally, I will also see how the long-term market, how it will perform, and then I will adjust my strategy from there.
I do care a little about the trends and what they signal, but when it comes to investing, I place even more weight on fundamentals, technicals, and long-term strategy.
Any impact on you?
It is making my portfolio great again.
Multiple adulting things that I'm involved and committed to.
I shifted most of my assets into the tech sector, hoping that the low interest rate environment might help boost returns in the area.
Actually, I've been buying some stocks here and there already.
Housing loan, my car loan, borrowing rates to be able to borrow cheaply and then invest.
I think my portfolio will go stronger.
Maybe a couple of the stocks in my portfolio will rally up, I hope. Yeah, but other than that, it doesn't really affect me much on a day-to-day.
So if the stock market goes down, I would then pump in more money to buy certain stocks or the stocks that I'm looking to buy.
So if there's more money supply out there, means this money has to go somewhere lah, right? Either it's the stock market or, I don't know, Pokemon cards.
What does this mean for Singaporeans?
So in Singapore, we are so used to taking home loan, right? So every time the interest rate move, our home loan interest move. So it's a big impact for all of us Singaporeans.
Definitely, it will be affecting us in our daily lives because, for instance, just take a look at SORA, which is the key interest rate benchmark in Singapore. It has really declined from over 3% in January this year to just 1.5% recently in September. And it's not just about the numbers. It changes the way that we save, borrow, and invest.
Things that are in properties could be doing better right now. Things that are heavily invested in R&D could be doing very well right now. So companies that are in the stock markets, which are property-listed companies, your REITs, should be getting better and better right now.
Definitely signals weakening US dollar and drives the yield lower. So that would be beneficial to the equities and growth sectors like tech. But I guess it's not really a one-way street because it also signals that the Fed is expecting a slower growth ahead. So for the investors, I guess the broad US market and growth sectors like tech might gain, but it also means that defensive positioning like exposure to rate might still be relevant if it's tied to a softer economy.
We benchmark the Sing dollar against a basket of currencies, right? And definitely the US dollar is one of the key components inside the basket. And with the rates falling, it's very likely that we will inherit that falling interest rate as well. In fact, Singapore interest rate have fallen much earlier than the US rates. And that's why we start to see that investors are looking for higher yielding kind of investments, right? T-bills, fixed D no longer offer that kind of attractive rates. So I think the biggest impact is more for the conservative investors. Now they need to take a bit more risk to look for higher yielding instruments.
Right, as a home loan taker, it improve my outgoing. But if you are a depositor, it will hit your interest rate, which is your inflow. You look at your T-bills and your fixed D rate over the past 6 months, it has been sliding. The only thing that didn't move was my coffee auntie can still sell me my coffee at $1.
For companies, they will be able to borrow cheaper to expand their business. And also for savers who have been putting their money in the T-bills, in fixed deposits, they will now have to rethink where to put and shift their money into next. So essentially, rate cuts touches everyone's life, whether it's the way you save, borrow, or invest.
What might young investors get wrong after the cut?
I think I'm not young enough. Let me walk to my young colleague. My friend, what is a mistake that the young investors are making today?
Mistakes.
Chasing after whatever is hot. Because right now when the rates are coming down, some of the risk asset might seem attractive, but if you just jump in blindly without really understanding the fundamentals that you're buying into, or if you pay too high a price for it, all of this could backfire at some point in time in your investing journey.
Maybe too overly aggressive. They just dump everything inside, hoping that the market will just go up from there. But the fact is that usually the stock market will have already priced in some of these rate cut projections much earlier, before even the rate cut happens.
Well, I guess investors, especially young investors, they try to pile down on the hot stocks just because they think there's a rate cut, they're definitely confirmed to be a rally. That might not be the case. So if earnings disappoint, if the growth is not as fast as they think it is, the stock might still fall. Another exposure would be the FX issue, because a weakening US dollar means it's going to be shrink gain for Singapore-based investors.
They're hiding too much money in their cash, hiding too much money in fixed deposits. And I feel there's so much opportunities out there.
The other camp would be procrastinate too long, right? Worry they wait, maybe I just wait a bit more, wait for the rates to go down even further. It's the same issue, right? Because the market have already priced in a lot of all these predictions and these projections. So even if you wait longer, it doesn't mean that prices will become more attractive as well.
The risk-reward ratios are very healthy right now. So don't just be so limited that I have to have something capital guaranteed. Because there's always a cost to things that are capital guaranteed.
So I do think that probably a more balanced approach and not be too aggressive and not be too conservative with respect to investments. Right? Take some actions, but do it responsibly.
Don't listen to hot tips you find online. So this is coming from a licensed advisor. The idea here is don't seek for one advice. Speak to a few people, different bankers, different advisors, different professionals that have your interests at heart. You know their intentions and how can they help you in your scenario.
Some young investors still are not willing to take the risk and still deposit into FDs, etc., rather than aggressively investing.
So I guess look for a high-yielding product than just going with the traditional fixed D and T-bills.
I guess so.
The Fed might feel far away from us, but a rate cut still changes the way that we save, borrow, and invest our money here in Singapore. And that is just one part of a bigger cycle. So in our next FOMO Fix, we're going to break down the full interest rate cycle so that you will be ready for whatever comes next. So stay tuned and we will see you soon.